Hi, I'm Melissa Bill, and welcome to the Business Roundup, where we catch up with the movers and shakers in the business world. Today, joining me is Hanna Wu. She's the CEO and founder of Amplify Life Insurance. Thank you so much for joining us today.
Thank you, Melissa. Excited to be here.
Now, I know life insurance or just insurance in general is starting to kind of make a name for itself in like the investment world. I know in the investment sector itself is kind of just evolving. I mean, you have like different types of investment opportunities and, including like digital currency, which is changing every day. Before we kind of dive into the subject, do you mind talking a little bit about your background and like kind of how you got started?
Yeah, absolutely. Yeah, life insurance is a really interesting industry. It seems not that interesting on the surface, but when you peel back the layers, there's actually a lot of different financial vehicles and how it's used as an asset category. And myself, I actually came from the life insurance industry even before my time. Both of my parents came to the United States in the 80s, and they were life insurance agents for about 30 years. And they really sort of built their careers in the life insurance industry. And myself, I graduated from college. I ended up starting my own financial planning agency and focused on high net worth individuals and helping them plan for their wealth, and went into more, really working through tax efficiency and how to build multi generational tax efficient wealth, as well as protect your business and accumulate tax efficient assets, whether as a business or for personal means, and ended up sort of full circle back in the life insurance industry because it is one of the financial vehicles where you really can consider multi generational wealth as well as leverage sort of this asset to build tax efficiency as well as, really protect your business, protect your family, and really what matters most.
That makes sense. I mean, we always talk about real estate used to be the big thing that was, a little bit safeguarded from certain things and, for tax purposes as well. Can you discuss how and why you kind of founded Amplify Life Insurance?
Yeah, so Amplify, we started the company in late 2019 and we kicked off our platform in 2020. I had my financial planning agency at that time for a couple years. We had about four different offices in the US. Ultimately, I realized that this financial vehicle is a $3 trillion industry, life insurance, protection, and retirement products. 80% of it is life insurance savings and investment tools, and permanent life insurance. So, lifelong protection for, individuals and businesses. And ultimately, that side of the industry, most everyday Americans don't know much about it. They don't know, even sort of the acronyms that are frequently thrown around in the industry,
No.
an IUL product, a VUL product, how does annuities work? And even though it's such a huge multi-trillion dollar industry, it's very much centralized with the high net worth, ultra high net worth, bank owned life insurance, corporate owned life insurance, private placement life insurance where you can invest in, hedge funds and private equity through insurance dedicated funds. I mean, it's a huge industry, but the everyday American is not so aware that this is a tool that they can be able to leverage to be able to help them build wealth. And so that was really the premise of Amplify, is that, one, how can we bring this sort of asset category to the everyday American, provide the experience that they're looking for, provide the transparency that they're looking for, and really bridge the gap to help them, the people who need it the most, to be able to build wealth. And so, that was really the premise of Amplify, is taking the distribution from, I'm building my book of business at the country club, to I am, connecting with the everyday American in meeting them where they are and helping them with an experience to be able to learn more about a different tool that can help them accomplish their financial goals.
And that makes sense. And now, can you share with the audience more about like this type of life insurance option? I mean, you said like I think it was mentioned only 1% have ever like had access to this type of investment opportunity.
Yeah, so it's typically accessed by, utilized by the 1%. And everyday Americans, it's not that they can't access it, it's that the distribution today is not as incentivized to offer it to, outside of the 1% because typically it's sold through, commission driven life insurance agents, much like my parents, right? Much like my family was for many years. And so, really, the incentive lies in offering it to high net worth individuals. And also, some of these policies are structured in a way that's most beneficial to high net worth individuals as well. And so, I would say with Amplify, the mission has always been to really help everyday Americans build secure wealth through life insurance protection and retirement products. And so the products that we offer, in addition to the simple term and simple final expense and simple whole life type of products, is products where you can use this vehicle to a part of your premium goes towards building and accumulating your wealth that you can be able to access not just after you pass for your family but also while you're alive. So for example, let's say you're putting in a monthly premium, you can put 70% of that or 90% of that into either similar to a high interest savings account or a public equities portfolio, and that can accumulate as you're adding more premium over the years. And you can then be able to borrow against that for things like buying a house or, for example, putting money towards your kids' college education fund and things like that. And ultimately, what happens is because it's a what you call a wash loan, so you're borrowing against your own money at a 0% interest. And after we pass, then your death benefit will pay back that loan. So you're really taking money for yourself earlier on. So it's a sort of a tax efficient means to be able to, access your accumulation.
And now also, like, how can people build wealth with this type of plan? What are some of the ways you like help them utilize it?
Yeah. This type of product really can help build wealth in a couple different ways. For example, I remember being in the industry and I met a colleague who she was, an older individual. She's been in the industry for a long time, and she had bought herself when she got in the industry at a young age. She bought a life insurance policy for herself. She bought one for her daughter. She bought one for her grandchildren, and she was just starting to have great grandchildren. And so by the time, and she set up a trust as well. And every time a child was born in her family, she would buy a life insurance policy early on, and by the time it was her great grandchildren, it was like, it was like tens of millions of dollars, right? Of capital that would ultimately be rolled in that trust accessible to her great grandchildren. And she was able to kind of secure that at a young age at a low cost of premium for every child, that she bought a life insurance policy for once they were born, starting with herself, right? And so, I would say life insurance is a way to really leverage protection, not just during the times when you need the most, but it's also an opportunity to build multi-generational wealth if you're thinking ahead, and have access to that money if you need it. But if you don't, it's a way to really be able to pass it to the next generation in a guaranteed and tax efficient way.
That's an interesting point because a lot of people, you think about life insurance, you get it when you're older, and you're like, oh, I'm getting old. But doing it young, at a younger age, it has all that time to build. And so, would you like suggest that if you're working with like a client, is that something that you suggest that they do early on?
Yes, it's a great question. So typically, what we would suggest, even back during the days when I was helping with, financial planning in my agency days, ultimately, we always recommend protecting first, right? So, for example, before you go and drive a car, before you buy a house, you want to have basic protections in place, right? And so, very similar as well as we suggest getting health insurance, getting life insurance, getting these protections in place first before we then move into the next stage, which is then how do we start to save? Save, have 6 months of emergency funds, ideally in the bank, right? If we lose a job, if something happens, have 6 months of emergency funds in the bank to be able to access. But then from there, how can I start to save securely? How can I make sure that I have a secure means to be able to accumulate wealth for my retirement future, right? Because we have inflation, we have, taxes, we have, I would say, market volatility. What we really don't want is ultimately in the long term, when we need our money, we either, don't have access to it, or if we retire at the wrong time, a market downturn, we start drawing from our retirement funds when the market is low, we're going to deplete that much faster. So starting with a place that is secure and being able to build wealth. And then after that, be able to then sort of put more money into places where you can, be able to have higher returns as well. So, that's how we sort of build up to a stable financial foundation where you're building with protection and security, you're building for emergencies, you're building for both safety and returns at the same time. And that way you have a solid foundation no matter what happens. Market is great. Awesome. Market is terrible. No worries. Have an emergency. You're covered, right? So all the things that, how can we build really true financial success? That's what we typically recommend.
Yeah, that's a good point. And you were also mentioning tax wise, what is different about, life insurance and this type of investment when it comes to like taxes and that type of thing?
Yeah. So taxes, ultimately, I would say this financial vehicle, life insurance, as an accumulation vehicle, um, either you can save what we call in an IUL policy, which is like a similar to a high interest savings account, but you're basically getting returns off of an index like the S&P 500, for example, and you get returns between a floor and a cap. So meaning that you're either getting a 0% floor, let's say the market drops like 20%, right? Then you don't lose any money because you have a floor, 0%, meaning you will not gain anything if the market goes down, but you will not lose anything. And then from there, if the market goes up, you have a cap. So you're capped at like 8% or 10%, for example. If the market goes up 15, 20%, you will get your 10%. But because you're not losing money, you're always starting off higher every single time the market grows, you're starting off on a higher and higher foot, right? So, so this type of policy is, an IUL policy. So it's more for like, I want to beat inflation, but I also don't want to lose my money because of market volatility. So the other type is a variable universal life policy, which is basically I am comfortable with losses, but I want all the return, right? So I'm going to build a public equities portfolio. And, that's a variable universal life policy. You can choose Vanguard funds, Fidelity funds, American funds. So, different types of funds, and you can build your portfolio of investments, get all the return, but also be open to losses, right? And so those are sort of the two types of savings and investment accumulation vehicles within life insurance. And both of those, you can access your accumulation in a tax free way through policy loans, basically. So imagine you buy a life insurance policy, you have a you have a death benefit, right? So let's say 70% is going towards the high interest savings that's growing on a cap and a floor. Um, then your 70% is growing. It's still a part of your life insurance policy. Your family will still get it, right? At the end of the day, the 30% is paying for your cost of insurance. That's a death benefit. Let's say $100,000 of a death benefit, right? And then the 70% is going towards your savings and investments. So you can access that whole thing will be passed to your family if you never touch it. But the 70% that you're saving and investing, you can take that out via a policy loan at a 0%, wash loan net interest rate. And basically, then it functions almost like a Roth IRA, right? So you can be able to access it in a tax-free way via a loan, right, at 0% net interest. And then at the end of the day, that your death benefit will pay off the loan. And so your family still gets your 100,000, right? Your initial death benefit, but the accumulated portion will pay off the loan that you use during your lifetime. So that's kind of how it works. So it functions like a Roth IRA in terms of tax-free access. But the difference between that and a Roth IRA is a Roth IRA, you have a max contribution, right, of let's say 6,500 or 7,500, right? Then in addition, you also have income limitations. After you make a certain amount of money, you no longer can contribute to a Roth IRA. And so there's just limitations. If I'm putting in a Roth IRA and I still want to put in more for my tax efficient retirement, or I'm making too much and I can't access a Roth IRA anymore, then these are, great options to be able to continue investing alongside a Roth or in place of a Roth to be able to still access that those tax efficient returns.
Yeah, that's pretty interesting. Yeah, because I know there's a lot of things too as far as taking the money early and there's a lot of hoops you gotta and you do get taxed. Like, I mean, in certain ways you have to be careful with it. I think more careful when you're like taking, from Roth and stuff like that. So and now is this on a national level? Do you work with clients across the country or
We do. We work with clients across the country. Yes, exactly. So we build our own products as well, meaning that we design, price, and build an experience fully proprietary to Amplify, working with our balance sheet partners. So working with carrier partners, reinsurers, top reinsurers in the world. And we also have our agency side, which means we have access to all of, the top life insurance companies' products as well. So we really want to design something that's the best fit. And, these types of products are, great for lots of people. But I would say, there's also situations where, they may not medically qualify or these products may be too high of a premium and maybe something that's, more simple, like I want to cover my family just for the next 20 years, right? And I'm looking for something that's lower cost, alternative. We offer all those options and we really want to find the best suitability as well as, eligibility for each individual.
that's wonderful. Now, if people want more information, what's the best way to find it? Would it be on the website?
Yes, on the website, we have options where you can buy these products end to end if you prefer to do your own diligence and go through the process without speaking to a human. Definitely, can do that. Otherwise, we also have the option of basically a licensed professional that can assist you and be able to help you find the best options and help you explain how that works and look into your personal situation to customize a product and a design that works for you. We have both of those options at Amplify.
That's wonderful. And now for you, are you on LinkedIn, social media, places that people can find more information as well?
Yes, absolutely. LinkedIn is probably the best place. Yeah, I would say, happy to connect and share, more about Amplify or some of the products that we offer. Feel free to reach out at LinkedIn.
All right, awesome. Well, thank you so much for joining us today. I really appreciate it. I actually learned a lot. That's the one good part about, doing some of these interviews is that you learn things from like experts and people in these industries that would have never known. So, yeah, thank you.
Absolutely.
Thank you for joining the Business Roundup, where we always try to bring you interviews with some of the leading people in business, whether it be technology, finance, or energy. I hope you tune in. I hope you subscribe and listen, and we'll give you updates for new interviews that are coming up. Until next time, I'm Melissa Bell.